We got to just talk about deflation for a moment, because as much as I hate to ever agree with Ben Bernanke, deflation is a really, really dangerous force, in my opinion. And here's the biggest reason. There are many, but I think here's the biggest reason. It causes people to put off buying decisions. And when you put off buying decisions, it massively reduces the velocity of money. And it just becomes this downward death spiral. As much as I hate inflation, I think it's the lesser of the two evils in a way, isn't it? Or am I crazy?
Yes, you're right, I think, on both of them. The problem with deflation is not just the slowing of people putting off their transactions. It's the oppressiveness of debt. For example, a mortgage holder in a house of a deflating price underwater still is required to pay the full price of his mortgage. In other words, that's a big transfer of wealth to the lender in such a situation, and a real loss to the debtors. And so I think the deflation is extremely bad. I like another comment you made about Bernanke, whether this is good or bad. I think we need stability. And in some sense, he was trying to achieve that, avoiding deflation. I don't think deflation was as serious as most people feared it would be. And I think we are just beyond some of that now. I think we're going to be moving out towards inflation in the future. And I think that's an important conclusion, probably the most important one that one should draw away from my opinions about where the U.S. economy is going. But before we get to all the reasons for why, I would just simply say that we can't trust the government to not continue to add money in through its deficits into the future, because that's their benefit to do so. They get to spend the money first, and then we get to put up with the fact that our savings, retired people, whatever, are your mom, are going to have less in the bank in terms of purchasing power.
They're a lot poorer unless they do the opposite of what you just said. Deflation makes debt more onerous, but inflation makes debt a lot less onerous. So get into debt, have long fixed rate mortgages, and then have the other asset that always goes up in inflationary times, which is commodities.
Exactly. Or real estate. Anything that can
that's
give
commodity,
you
yeah.
physical asset, therefore protection against destruction of the currency. My basic view is that 2013 will be the start of the new trend in direction of the recognition in the world and ourselves of the non-impotent omnipotence of the dollar. In other words, that the dollar's power will decline, and that therefore there will be inflation. And then once it gets going, that inflation feeds back on itself in higher interest rates, which then adds to the lack of confidence in the currency, which then adds to the future inflation. And that long-term cycle, which was going the other way pretty much since 1980 at the peak of our inflationary time, I think hit bottom last fall and will go the other way. It's my view about how this is happening. You know, you can see it yourself. You're in the real estate business. You probably know much more about the on-the-ground business of it than I do. The big fear in the early part of the big downturn, some people call it the Greater Depression, others give it different words, but the last big recession was deflation, in particular that you'd have repudiation of debt, namely people going into foreclosure on houses, and that's actually extinguishing purchasing power as debt is removed from the system. Therefore, that is deflationary. And, of course, that's what Bernanke was leaning back against. The point I'm trying to get to is if you look at default rates and so forth, they're in pretty good sizable decline in the U.S., particularly here in Silicon Valley. My goodness, we're in a housing boom again. I mean, this is feeling like 2000 again for the housing part of it. Houses come on the market, inventories are low in the nice areas. You can't find a house for under $1 million in a reasonable neighborhood. You want to buy a garage, you can pay $200,000 or something, but you can't live in it. It's crazy out here. And the point of all of what I'm trying to get is, it's not the houses changed, it's the paper dollars in which they are denominating them that are losing the confidence. And it's already happening here, and I expect it'll happen over the next couple of decades pretty dramatically, to being much worse than what happened, say, through the 1970s into the peak of 1980. That's my own personal prediction. I even fear that we may have to repudiate our dollar as a currency sometime in our lifetime because of the long-term outlook of deficits from our government that for which there is no answer.